Okay, hey guys, this is Brian here from The Boring Husband. Okay, this video wasn't planned. Okay, it was only because I saw PayPal drop like 6-7% in the post market, so I thought I'd do a quick one on this. Okay, let's take a look at the technicals first. Okay, always, I love to look at the technicals first. Okay, show touches on screen. Okay, come, let's take a look at this chart. So as of yesterday market close, okay, PayPal, as we know, is down about 7 or 8%. It's really bad right now. Okay, but let's just take a look at what happened in the days before. So PayPal is currently testing the 200-day moving average, and actually that's a pretty good thing. You can see that in the past, okay, that's what early this year, we kind of broke above the 200-day moving average, and very quickly, less than 2 days, kind of retracted down, and it continued the bear rally. Okay, at the moment, we are seeing consolidation at the 200-day moving average, and that's actually a pretty good thing. Okay, so consolidation at resistance always means that when people are going to sell, there are more people buying into that level, so it's always considered bullish, like, by and large. Okay, we saw it consolidate at the 200-day moving average for about a little more than a week. So in my opinion, that to me, okay, indicated that the chances of it going higher is actually higher than the chances of it going lower. Okay, but of course I was wrong. Okay, I cannot always be right, I wouldn't be here. Okay, and we can see that as of today, as of now, okay, post market, the stock kind of retraced to $67 around there. Okay, so trading view over here doesn't show the post market action, so I kind of drew the yellow line, and you can see that the yellow line it kind of coincides. Okay, let me just kind of make it a little bit bigger for everyone. The yellow line here coincides with the 50-day moving average. So these things, right? Okay, they are not coincidence. Okay, it's all technicals. Okay, so we saw it retrace from the 200-day to the 50-day moving average. So this is where the stock is now finding support. If the stock can continue to find support, okay, at the 50-day moving average, then you're pretty much looking at the formation of a new bull rally, where basically you have a series of higher lows and higher highs. Let me just kind of like figure out how to draw a line here. Hang on a second. Is this the one? Yes. Okay. Oh, sorry, that's not good. Yeah, something like this lah. Okay, you're looking at something along that lines. Okay, so basically, higher highs, higher lows has a formation of a new bull rally. But in terms of technicals, that is how I see it. Okay, but as we know, the market doesn't always respond to technicals. So let me tell you exactly what happened. Okay, in terms of fundamentals, okay, this is what I managed to find just this morning. Okay, so there was a very small revenue beat. Okay, EPS is in line, guidance is in line. Total payment volume, okay, so how much payments they are processing is about 37.6 billion. That's about 11% up. Okay, that's very good. The main reason, okay, why I think investors sold off is because operating margins are lower. Okay, so basically, if you look at it, the company is now earning a little bit less money. Okay, so it was supposed to be 22% consensus, but it came in at 21.4%, and this is actually much lower than the first quarter of this year. That was 22.7%. Okay, so if operating margin continues to decline, very simple, the company will earn nothing over time, correct? Because your margins get less and less and less. Okay, you would think that for companies like EV, margins would decline because cost is going up, right? Manpower, factory close, etc. And you would think that for a company like PayPal that's relatively asset light, that their margins shouldn't be lower, correct? Because it's a software, it defies what we know as investors. Okay, but yes, operating margin continues to decrease. Hence, I think that is what fueled the sell-off. Okay, PayPal has had a pretty strong run up. Okay, the benchmark is set for them to do better, so this just kind of came in a little bit below expectations, hence the sell-off. Okay, if we look at other indicators as to why it sold off, okay, we saw that overall yesterday was a very bad day. Okay, once again there was a downgrade for credit ratings, US credit ratings from AAA to AA. In addition to that, pretty much other companies that reported earnings, pretty alright earnings, also continue to sell off, like Robinhood, Shopify. Okay, one thing that's probably not say good or bad, okay, but PayPal continues with their share buyback program. Okay, so by the end of this year, they would have bought back almost $5 billion of stock. That's about maybe 6 or 7% of their total current market cap of 85 billion. That's a good thing. Okay, but overall, in my opinion, the fundamentals are not very bad. Okay, consumer spending is still going up. Okay, we don't see it going lower anymore. We're just seeing them, in my opinion, have some issues with margins, and I really hope that they sort it out. There's going to be a management problem. Okay, the CEO is resigning, and media states that he's on the last stage of choosing his successor. So if you think the current CEO is doing a bad job, then you welcome a new one. If you think that where the current share price is, that the CEO is doing a good job, which I honestly don't know why, then you wouldn't be welcoming the management change. Okay, in my opinion, the stock is really doing very badly. Of course, as an investor, if I look at it at face value, if the stock is doing badly and the CEO is going, then of course I'll welcome a new CEO. Okay, but of course the same cannot be said for Disney and Bob Iger coming. That one's a different story altogether. Okay. Also, on a very fun note, okay, I always like to think that people that do great things continue to do great things again and again. And interestingly enough, the founders of PayPal that sold PayPal away also became the founders of YouTube. So that's really interesting. Can't think about that for a moment. Okay, but if not, I continue to be a PayPal bull. I believe that they are still a very mature company. They continue to be one of the safest and, of course, I would say consumer preferred method of transaction. But of course, in my opinion, these fundamentals, they are not deal breaking in any way. We didn't see the company kind of suddenly cut revenue by 50%. That didn't happen at all. Okay, in my opinion, the stock will probably have sold off maybe 1 to 2% on a normal day, but because of everything else that's happening kind of went up to 7-8%. We want to make sure once again that the stock kind of holds at this 50-day moving average. A little bit of consolidation at the 50-day moving average is good. Let's keep our eyes peeled for that. But if not, have a great week ahead.